Well, let's talk now to Xiaolin Chen, who's Head of International at KraneShares. Good to see you. Welcome back to the programme. So China easing its monetary policy stance, adopting what's been called a moderately loose monetary policy, a more proactive fiscal policy. What can we read into the wording of this?
Just believe what they say. Just like in 2010, when Mario Draghi says in Europe, we do whatever it takes. This is China's moment of they do whatever it takes to get the economy back on track and then stabilize their capital markets from here. I gave nothing but this time around really the credit to Chinese policymaker for announcing decisive policies since September until now. Nothing but very decisive policies in terms of helping on consumer, helping on corporates, helping the local government to deal with the debt issue step by step, and very quick in implementation. September, when they announced the policy, the implementation take them just about a week, shy of less than a week, to start to implement. A lot of the opportunistic investors invested into China in September to their equity market. When the market ready, they take opportunity to take it out. I would strongly suggest that this is not for a cute technical trade. This is long-term strategic allocation to this asset class after almost 8 quarters of the policymaker being decisively of helping the economy. Finally, they released a bold statement. They will do everything they can helping the consumer, which is a key driver for Chinese economy. I think you can expect more decisive measure in the Working Economic Group that is to be held in a day 2 time in Beijing. And then thereafter, we will expect more policies in the NPC, so on and so forth. I think now the put has been firmly introduced by the Chinese policymaker on China's capital market.
So it sounds like this is a significant move then. What's been the reaction from markets and also bonds in China?
It's a lot of short covering because they, broadly speaking, this asset class is not only undervalued, it's also underowned. You do see the trends of underowning this asset class start to reduce versus their benchmark. Even active mutual funds has been acting on top of that from September, rushing in to close or at least reduce the underweight positions to China before the 3rd quarter of this year for their statement to look relatively neutral, but they still underweight to this asset class. So we see a lot of inflow in September when the announcement first came out. The flow started to be calming down because the market is expecting more policy, which is ready to do so. NPC in November said they have more policy that is working in progress to be announced in the coming months, which market is expecting more. So this pre-release before the Economic Working Group is reconfirming the market's or the investors' expectation to focus on consumer, which they get that. We've seen some flows in late, rally in Chinese market, but I'd say most of them are short covering. And no one really noticed that today China's asset class, like the consumer sector, is outperforming S&P, outperforming EM, outperforming a lot of the asset classes quietly, but well-deserved rally.
And then President Xi has reaffirmed that China is on track to meet its 5% growth target of GDP this year. Will it?
This will be a question to see how effective this policy can be. Still earlier days, but if you look at October data, November data, retail sales and PMI are starting to show sign of recovery, which is an encouraging sign to see. If they could boost more implementation, which is what they're trying to do, to implement all these policies in time, I wouldn't be surprised they can meet the 5% target. And at the end of the day, they have to meet the 5% year-over-year target to achieve the urbanization goal that is set out at the beginning of President Xi Jinping's 3rd term. This 3rd term of his, leading the country, major news, major focus has been economy. So if I say all the policies in place, corporates got to start to feel more comfortable and confident, pick up in activity, which now you start to see the single state sales shows retail are very strong. We need a lot more data to back up if the policy are effective. But I do have the confidence if things goes the way it is now, set out now, you could expect China to meet the 5%, if not exceed slightly.
Xiaolin Chen, Head of International at KraneShares. Good to talk to you as always. Thank you for joining us on the programme.
Thank you.